Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18, and let's talk about the world of commodities now. Manisha joins us for an update, and today she's going to take us through the metal prices. Manisha.
Pavitra, thank you so much for that. Well, we have seen metal prices gain multi-year highs, all-time highs in the previous year, and then a big amount of correction as well. But as we step into 2023, there still are concerns about recession, COVID flare-ups that we're looking at, and the Russian sanctions as well. The positive here is that China is saying that they will manage COVID as a Class B infectious disease instead of the Class A, which they've been doing until now. So that will pull back a lot of restrictions from there. Also favorable domestic Chinese policies, whether it has been about the liquidity injection or cutting reserve ratio, ensuring that there is more playing field coming in for the realty companies. All of that clearly has been supportive. And then you have winter stockpiling also happening in Asia and various parts of Europe. That would need demand for metal prices continues to be on the higher side. Markets also anticipating that the EV and renewables demand in the second half of 2023 is going to be one of the reasons that you will see support continue in case of metal prices. And then it is about multi-year low inventories that will continue to support the markets here. Take a look at the fact that LME has entered into 2023 with the lower warehouse stocks in metals in last 25 years. If you look at aluminum inventories, they have declined by 72%. Zinc inventories have declined by 90%. Lead inventories are trading at a 15-year lows right now. And you have copper inventories just about for 5 days of global consumption. Nickel, the shortage that you have on LME for the deliverable metal has been making it difficult and is the reason the metal has been playing in the premium there. When you look at the overall metal picture for 2022, we've seen nickel prices as an outperformer up by 45%, and this has been the best gain since 2010. In other metals, you have iron ore as the only sole gainer. It's trading at a 6-month highs, and we've turned positive onto this one, 1.5% on the higher side. Copper saw 13% of a decline, and this has been a first annual drop since 2018 coming in for copper. In other metals, you also have tin, which fell by 36%, biggest annual decline since 1990 coming in for that metal as well. When you talk about the outlook then, and we have a report from Citi suggesting that they are looking at bearish views on nickel and zinc for the next 6 to 12 months. Most markets do believe that there is going to be some positive outlook continuing in case of iron ore and aluminum because of the power rationing that we're seeing in China and Europe as well. Citi, for one while, has been bearish on this. It also has been bullish, though, in case of gold and silver there. But this is about copper, where the best of the outlook really comes in from Bank of America. A record high of $12,000 is a possibility, and Goldman Sachs is quite bullish on that. Everybody else thinks that the copper prices will trade anywhere between $65,000 to $8,000 per ton on the higher side there. Put out on what we have done in sense of from the highs for many of these metal prices in 2022. So, well, as I said, it's only been nickel and iron ore which have traded in positive in this year, but they also have come off highs quite sharply. That is various other commodities which have seen a sharp decline, whether it's zinc, iron ore, or steel, down anywhere between 25 to 45% from their highs. And that is the reason the market believes that in 2023, even if not this quarter, the next couple of quarters will see rebound come back into this space. All right.